Very good afternoon to all. Thank you for being here today. We have this huge crowd waiting for today. I think Elsa, you're very popular.
Thank
So,
you.
our today's topic of discussion, I'm sure you all know, is necessity that is preparing GST annual returns. Our expert for today is Mr. Ezhilarasan T. Elil sir is a GSTP. He's a passionate trainer, particularly in GST law and procedures for businessmen, tax practitioners. He's a tally expert and tally evangelist who helped conduct trainings at various forums. We are glad that Elil sir took out time from his very busy schedule and agreed to take a session for us today. A note to the audience, as this we have almost 100 people here, please do not raise your hands. We will take the raised hands queries only at the end so that it doesn't disrupt sir's flow. Please put your questions and in the Q&A so that we can keep a track and make sure all of them gets answered, and in your comments in the chat box so that as and when it can be an interactive session. Over to you, LL sir. Thank you.
Thank you, Komal. It's again very good afternoon. Good afternoon to all the people here. Thank you once again for being gathered in such a huge number here. So I am very much thankful to all of you, as well as I am very much what to say. I have to be clear about my session also. So thanks. There are so many names which are new to me. Anyway, since it is an all India session, we have to be strict on the English language so everybody can understand the constraint. Anyway, we will start the session. Thank you once again. Thank you, Tally Solutions and the evangelist team, the members in the team, the entire efforts put on by the Tally Solutions Private Limited for bringing the necessary knowledge as and when needed to the Tally community. Thank you. We'll just begin the session. I am just switch off I am cutting my camera so that the audience could be possibly hear better. Okay. Here, as far as the annual returns are concerned, there are periodic updates which are more crucial in proceeding with the annual returns. As far as annual return is concerned, GSTR 9 is the prime document which we are going to file on or before 31st December. Beyond that, the another second document, the reconciliation statement, GSTR 9C, is again for this year and the earlier year, it is by the self-certified mode. Therefore, that assessee, the taxpayer, has more responsibility in taking care of all these annual formalities. So, yes, the agenda is this. Today, as all you know, through the invites communicated to you, the recent updates in GSTR 9C for the financial year 21-22, which are about to filed on or before this 31st December 2022, preparing towards financial year 21-22 annual returns. What are all the things to be taken care? The essential reports from TallyPrime towards preparing the 9C reconciliation statement particularly. Yes, there are two crucial reports which we have to furnish, like the percentage rate-wise report, the taxable supplies bifurcated into the percentage-wise details, and the other things, the ITC's breakup, though it is not mandatory, but for our record purpose, we need some breakup of ITC taken across the various ledger heads. These things are already available in Tally. Beyond that, the turnover reconciliation. These are all the crucial elements which are to be taken care in the annual return preparation. How best we can take these reports from the TallyPrime. That is our core objective here. Then the last but not least, the question and answer. Anyway, I'll try to answer most of the possible questions. We have to be strict on the timeline because the sessions have been allocated for more and more agenda. So therefore, So please be clear about the questions and we'll try to cover the entire requirements. Before getting into the subject, so I just want every one of you to have a look on the notification part, which is the notification part, which is guiding the preparation of 21-22 annual return. So every year, all you might know, the original form of GSTR 9 contains 19 different tables of information. But since inception of GST 17-18, there are so many tables left as unattended because that government typically told it's are not compulsory. As far as 21-22 is concerned, this 14/2022, 5th July 2022 makes the difference. Here, this takes care, this actually guides every taxpayer on the amendments which are relevant for the preparation of 21-22 annual return. Here, the 12th point in that notification, which states the Form GSTR 9 amendments. The amendments are in this way, like just adding the 21-22 financial year on each and every respective paragraphs. Anyway, we'll just get into the subject where I'll tell you what these notifications represent and where the changes, where the guidelines are applicable. Yes, when we talk about the annual return, these are all the tables, all you might have known. So these are all the tables. The 19 table is not there, the final table, which is for fees and all. So these are all the various tables. Most of the tables here in TallyPrime, anyway, we have an annual computation statement. That statement takes care of most of the components here. Before getting into the subject of TallyPrime, we will just understand the notification, what it guides us for the financial year 21-22. Yes, the first guidance from the notification is until 2021, we were allowed to consolidate all this credit note, debit note, then the amendments, everything. But as far as financial year 21-22 is concerned, these options have been withdrawn. Meaning to this is we need to mention that debit notes, credit notes information, the amendments, everything in the table 4, the first table, that is the taxable outward supplies table. Right here, this is one of the guidance from that notification 14/2022. Anyway, I'm just quickly running through the statutory updates, recent updates, what we talk about the preparation of GSTR 9, because the entire table we cannot able to comply. No, there are some benefits, there are some advantages which have been granted in the law itself. Therefore, we are going to just understand what was told in the notification. Yes, as far as the second table is concerned, table 5, that is talking about the outward supply which are not taxable, that is exempted, nil rated, non-GST, all these things. Here, till 21-22, we were clubbing, we don't have any restriction on clubbing this exempted, nil rated, non-GST, all these three. But as far as this 21-22 is concerned, the notification clearly guides us that the non-GST portion has to be reported separately. Non-GST portion has to be reported separately. The exempted, nil rated has to be exempted, nil rated can be clubbed together. That notification reads like this: for financial year 21-22, the registered person shall report non-GST, shall report non-GST supply at 5F separately, and shall have an option to either separately report supplies as exempted and nil rate. Either he can report separately, or if he finds any difficulty, he can consolidate this exempted and nil rated together and put it in exempted row only. Yes, I'm just getting into Tally. Here, I've just got into Tally itself. In the Tally GST reports, we have GST annual computation. Yes, the annual computation automatically takes you to the format which are required under the law. Like if, when I say the outward supplies, outward and inward supply, the first table part, there it gives the first thing gives the taxable supplies. The second thing, though the table names are not apparently shown here, but the contents are sequentially arranged in a manner which is required in the law. So here the outward supply, which is taxable, is in the first part, table 4 part. The table 5 part is here. In this table table 5 part, here the exempted, nil rated. Again, my interpretation here is how these classifications are done in TallyPrime means, though everyone may know this thing, while we create our sales ledger itself, while we create our sales ledgers, let's say local sales. When we create our sales itself, here is a, when we create a sales itself, here is a classification, nature of transaction. Nature of transaction is there in your GST details portion of your ledger creation. So there we have an option of classifying under exempted, nil rated, sales taxable, sales nil rated, sales exempted, sales nil rated, sales exempted. Then what about non-GST? Yes, non-GST classification is here, is non-GST. Okay, by mentioning these things, in your sales ledger, by marking these things in your sales ledger, automatically all the ledgers, all the transactions, outward supplies marked under this particular sales ledger is taken to the respective non-GST classification. When I say is non-GST, it is taken directly to the non-GST report. So this is the first step towards how the TallyPrime takes care of the annual return preparation. Each and every elements, what are all the elements the TallyPrime takes care in preparing the annual return part. Okay, so coming to the format, the guidelines for 21-22, the notification 14/2022. So here is this is another change. The first change was the bifurcation, which was not required in the earlier years in the table 4 taxable supplies, which is now required. Anyway, credit note, debit note, we all be recording in the Tally, and we have a separate this thing. As far as the amendments are concerned, amendments, you know, while we download the GSTR 1 from the portal, the amendments will be there. We can cross-verify that amendments and with the annual report. In the second table, the table 5, the exempted nil rated, as I told you, the non-GST classification, separate disclosure of non-GST classification, which is now getting mandatory for the 21-22, is taken care by Tally by marking the ledger creation level itself. Then coming to the next part of the table 5, which is about exempted nil rated turnover, there are some relaxation of clubbing these credit note, debit notes relevant to the non-taxable items, that is exempted nil rated, which is still there, like similar to earlier years. For financial year 21-22 also, the registered person shall have an option to fill the 5H to 5K net of credit notes and debit notes amendments in case there is any difficulty in reporting such this thing. So the relaxation which were considered till 2021, which is continuing for 21-22 also for the credit note, debit note values in table 6 for the non-taxable outward supply disclosure at the annual return. Yes. Next, going forward on understanding the table 6 in GSTR 9, we started with 1, 2, 3. 1, 2, 3 are basic information about the company. The 4 table is the starting point where we disclose the values from our books of accounts. The first table has some the taxable values. The second table, which is table 5, talks about the non-taxable things. Table 6 again has some crucial things, which is nothing but the title runs like this: details of ITC availed as declared in returns filed during the financial year. The terminologies used here are most important to fill this information, because there are so many questions raising in the minds of the people while preparing the actual annual return, whereby people often used to ask us like, sir, whatever left out in the regular monthly returns, we can take it in annual return. No, sir. In that sense, why not we take the ITC which was left out in the earlier monthly returns? All these things, why not we take it in the annual return? These are the often raising questions in the minds of the taxpayers. The answer to the entire questions here is the title itself clearly says the ITC availed. Availed is the past tense, the event which has happened already. Where ITC availed as declared in returns. In returns here means the monthly returns which are already filed during the financial year. In that sense, there could be some ITCs which have not taken during the financial year, but which were found in the later stage and which were availed in the later stage until the extended time of this 30th November 2000, the latest extended time of November 30th. All these things comes under the different table. So the title of this particular table is much more important. The amendment comes, what the notification says for this particular table is the red boxed elements are crucial here. Earlier, until 1819, we had a concession. Sorry, we had a relaxation. We could say we had a relaxation of putting all the values of this input services, capital goods, all these three put together in a single line. We had until 1819, we can say. After 1819, here 1920, 2021, 1920, 2021, and 21-22 also. That line 21-22 also joins here. So that's what the notification says. 14/2022, 5th July 22 notification amends the format of GSTR 9, which says the bifurcation in the table 6 for ITC availed, where the bifurcation of capital goods is important. The classification of capital goods is important separately. But clubbing of input and input services could be done like this. The lines are here. Similar to 1920, 2021, for 2122 also, the registered person shall have an option to either report the breakup of input tax credit as input and input services, or report the entire thing. So here input and input services need not be shown separately. It could be clubbed. But however, the capital goods and also the registered, another guidance is also here, like the registered person shall have an option to either report 6C and 6D separately, or report the consolidated value of the 6C and 6D in 6D. 6C and 6D talks about the registered person, unregistered person, the reverse charge payable to the registered supplier or to the unregistered supplier. Registered suppliers comes under 6D, unregistered suppliers comes under 6D. If we have any ambiguity or if we have any doubts on classifying between the registered and unregistered suppliers, we can put it in the registered suppliers reverse charge itself under table 6D. This was the guidance from the notification 14/2022. This is not a new guidance. This has been there since the 1718, the original first annual return itself. The only change here is the bifurcation of capital goods. Anyway, come to the tally part. How can we bifurcate? How can we get the bifurcation of ITC availed as input services and capital goods? There are two areas where we classify in Tally this input services and capital goods. One area is where in the stock item area. In the stock item area, we give one, when we create a stock item, we mention the type of supply. By this, Tally classifies, when we mention the type of supply as goods, then Tally takes this type of supply as inputs. Tally takes this type of supply as inputs. When we mention this as services, then Tally will mark this as input services. So these are all some of the crucial, master creation techniques whereby the GST compliance is made easy. Though these type of classifications are not mandatory in the earlier years, now it is becoming mandatory. Moreover, this year and the last 3 years, right from 1920, the capital goods has to be separated. So beyond that, input services for the people who get refunds and all, this inputs, the ITC from input services is also mandatory. Therefore, the classification in stock item level gets importance here. Okay, the statutory details in Tally, GST related statutory details are playing a vital role on this type of GST compliance. Okay, then the second level of this type of supply marking comes under your ledger creation. So in ledger, the same statutory GST level, I can mark this. I can mark this thing. I can mark this type of supply. Type of supply comes only in your this thing, purchases and sales account, wherein this type of supply comes. Here, goods or services. similar to your stock item coming here. By marking goods, it takes you to the inputs. By marking services, it's taking the values to the input services. Okay, coming to the capital goods, where it is done, capital goods. Let's say capital goods are nothing but the items which are classified under fixed assets. Typically, we can say in our accounting language, capital goods are nothing but the items which are classified under our fixed assets table. So let's say when I create my capital asset, machinery, fixed asset, when I go and alter the GST details, after I select my taxable part, purchase taxable or whatever, then the nature of goods comes, nature of goods classification comes. Here, when I mark the capital goods, then all these things gets into the capital goods classification. Usually, these capital goods will reflect in our accounting records as our fixed assets additions. So therefore, while creating the fixed assets master, Tally asks you to classify the nature of goods. Okay, by this, we can able to understand how Tally brings you the breakup of this input capital goods and input services. Anyway, by marking these things, whatever entries you put under these particular ledger, this is directly coming into your annual return statement, annual computation in the bifurcation, input tax credit, the bifurcation it comes. Okay, here in this report, you are able to see there are some 9,000 entries. All other ITC capital goods is there. When I get into that, in May month, I made one entry. In that, my entry is this. The machinery entry is this. How it comes under capital goods? The machinery, I marked the nature of goods as capital goods. Though I mark the same thing goods in the outer table, in the inner table below to the nature of transaction, when I mark the capital goods classification, it takes you to the respective capital goods ITC classification. So this is one of the major requirement which has been there for the last 2 years, that is continuing for 21-22 also. Gentlemen, please refer to the notification 14/2022 for your clear and proper preparation of GSTR 9. Fine. As far as the next table, table 7, the reversal part, ITC reversal, ineligible ITC, all these things. Though there is a classification from alphabets A to H, A talks about rule 37, B rule 39, rule 42, each and everything has different things. Yes, the short notes of each and every rules being displayed in the screen also. Yes, though there is a separate requirement of putting the reversals across different line items, the notification continues the relaxation which was there in the earlier years, like the separate disclosure of all these things is also not mandatory. It could be clubbed and put it under 7H. This relaxation continues from last year, but though the requirement is not there, having these things, the reversal under the separate classification is vital for everyone to face the tax litigation, post-tax litigations, post-return tax litigations. I am just getting into TallyPrime. for this thing also. Anyway, now we have seen the input tax credit table here. Here in the input tax reversal, the same thing is there in Tally also. How can we get these information in this particular line items? All this 37, 39, 42, 43, everything is here, like what was shown in the format, exact GSTR 9 format. It is here. Okay, how can we get it? Yes, everybody might have known, so I am not getting into this particular information because everyone might have known this stat adjustment, the very best, the unique facility in Tally, because the compliant, there are so many GST compliance software and GST compliant applications across the market, but I could say this is one of the greatest strength of Tally, of putting the books of accounts entry as far as this ITC reversals part is concerned. Anyway, reversal of input tax credit. When I say reversal, it asks about additional details like which is the section, provision, rule, the rule 37, rule 39, even that says the subsection, the subpart and everything is taken care. So when I select that classification, the stat adjustment details, the nature of adjustment, the additional details and the everything. So when I select that thing and put my journal, so because why I am here talking about the journal means reversal, logically it means I availed one ITC, I am giving it back in the sense, while taking the ITC, I would have debited my ITC. I would have debited my tax ledger of CGST, SGST, IGST. While reversing as a book entry, I should make debit that respective expenditure or the purchases ledger and credit that input tax ledger. This is an accounting entry on reversal. There is no magic. There is no separate magic in putting these things. We have to imagine the logic behind, the accounting logic behind this ITC reversal. While putting the accounting entries itself, our TallyPrime magic asks you about your statutory adjustment details. If you mark the correct classification, additional details and all, certainly these will be taken to the respective return. Say for example, here non-payment, I am reversing the entry in the sense I can I can put the entry like this: purchases account, debit, say for example 1800. So input CGST 900, say for example, let's say if it is 900, it could be for 10,000 rupees, 900. Then credit input CGST, SGST, same thing. So again, there is a checkpoint also. TallyPrime gives so many cross verification points. When we experience with TallyPrime, the genuinity, the correctness of the transaction, what we put in the application, that makes sure of seeing small things in between the transaction. Like if we get this small table, then we can make sure, oh, this entry is made right. This entry is made right. So these are all the small strengths of Tally, wherein it keeps a user to be on track, not even in what to say. It takes you to put the right entry. Say instead of crediting, if you debit it, this may not be a right entry. So if you debit it, under this reversal classification, that small box will not come. In that sense, we can understand, so that this entry is wrong. So like this, there are some indirect indications within the TallyPrime itself of these things, whether this ITC reversal entry is made correct or not. Okay. So when I put this thing here, the objective here is to show the reversal classification in a separate rule 32, rule 37, this thing. So how it marks, the TallyPrime marks it to the separate classification. Here we will see that on 11th November, I put an entry. We will go and see there in the annual computation table. Here in the ITC reversal, you see my non-payment reversal comes here. Earlier there were no entries here. Now here my one entry has come. So this is how the statutory requirements of GST is being fully taken care while applying, we maintain our books of accounts in the TallyPrime. I request every one of you, every audience here, to make use of this thing. Meaning, actually, for this type of ineligible input credit, reversal of input tax credit, reverse charge mechanism entries, all these things, people used to record it in the returns, but they just have some Excel kind of working, or they just have some notes kind of a thing appending to their monthly returns. But my sincere request to every one of the taxpayers to kindly update the ledger accounts to that effect. Whatever you furnish in the return, you have to make sure the relevant accounting entries put in the books of accounts. By getting into that, the aspect of putting the accounting entry, Tally is the only choice. TallyPrime, Tally software guides you to the respective classification as well as the books of accounts tallying also. Again, these are all the things, though it is still an additional job. If we put then and there, everyone might have experienced in the recent days, there are so many clarification notices, then scrutiny notices, which asks about the balances, differences, the differences between the values shown, all these things. So when we have a Pakka books of accounts tallied with the values which we were disclosed in the returns. So instead of having in the ledger notes, or sorry, instead of having in the Excel notes or in the manuscripts, we have to make it in the books of accounts entries itself. This is what my primary expectation. Yes, as far as this 10, 11, 12, 13 table is concerned, what was there in the earlier thing continues for the 21-22 also. No much change in the 21-22. So the thing is that 10 and 11 have to be disclosed, but 12 and 13 talks about the reversals which taken place after March 22. Then 13 talks about the ITCs taken after March 22. This thing earlier 12 and 13 is not mandatory. It's an optional one to mention for 21-22 also. Then as far as this table, 15 table, which is doing the demands and refunds details, which is also not requirement one, not a mandatory, not a requirement, I should not say, not a mandatory one for until 2021, until 2021, which is also continues for 21-22. Then comes the 16 table, which is about the deemed supply, which is again relating to the job work and all these things. Even Again, this supplies from composition dealer, composition taxpayers. This thing, composition taxpayers, is also actually the classification is there in TallyPrime, though it is not mandatory. When we create a customer master, a supplier master, there we have a classification of marking or whether it is a regular taxpayer, a composition taxpayer, or a customer, consumer, unregistered person, all these things. No, these markings finds part in this classification. Anyway, this table 6 is not mandatory for this 21-22. Yes, now comes the hero of this 21-22 is the table 17. I can put few minutes over here in this particular table, few minutes over in this particular table 17 of GSTR 9, because until 2021, this was also an optional one, but the notification runs like this: from 21-22 onwards, it shall be mandatory to report HSN code of 6 digits level for the taxpayers having the annual turnover in the preceding year above 5 crores, and 4-digit level for all B2B suppliers for the taxpayers having annual turnover in the preceding year up to 5 crores. So these are all the mandatory requirement for HSN disclosure, HSN product codes and SAC service account code disclosures, which is now comes under the GSTR 9 disclosure also. 9 disclosure also. Yes. How it is peculiar? Now the question, how it is peculiar for the annual return alone? We have been all doing the same classification in GSTR 1 also. At the back of your mind, we can think, wow, what is new in this thing? Why not the same thing? All these things may arise in your back of the mind, but people who have experienced, who have literally put on hands-on try on this particular table, would have experienced what was the crucial element in this HSN summary. Okay, straight answer to this thing is my TallyPrime annual computation statement as this HSN SAC summary. So when I have all the annual computation statement without this error or all error corrected statement, certainly I can rely on the summary of outward supply, HSN summary of outward supply given by TallyPrime itself. Okay. The gentleman asks, 18 is not mandatory. Table 18 is not mandatory. Table 17 is only mandatory for 21-22. Table 18 is inward supply, anyway, which I'm going to come the next subject, obviously. Anyway, just concentrate on this thing. Table 17. Okay. Here, table 17. The crucial element here is this: when we put the entries in the GSTR1, HSN summary doesn't have much validations in it. In the sense, like here you could see the tax amount 42,864.91, if I put 18% on the taxable amount, this total tax amount should tally. So in the GSTR1, it doesn't have that validation. Whatever value we put in taxable, this IGST, CGST, SGST, there is no checkpoint in GSTR1 monthly return. But in annual return, when I say any different amount in this tax portion, obviously this annual return table 7 data will not get saved in the system. Therefore, it is utmost priority to everyone before to the last date of the filing. We have to make sure the HSN summary. Anyway, we cannot leave as it is. Without the table 17, the annual return can't be filed for this 21-22. So HSN summary, table 17 information has to be tallied. So if we have the error corrected table 17 information in tally, we can straight away put the information plug and play, like plug and play information in table 17 GSTR 7. Okay. Table 18 is not mandatory, sir. Again, so many questions are coming as far as table 18 is concerned. Table 18 inward supply is not mandatory. Again, there are some guidance for them also. Though table 17, we have to do with all the information, but table 18 is not in that sense. Anyway, now we'll take care the rest of the information. Yes. So table 17, again, I am repeating table 17, which is talking about the HSN summary of outward supplies. HSN summary of outward supplies. Again, another question I got, sir, here we have to give only for B2B for the 5 below to the 5 crore level taxpayers. This question often raised by the person. Again, my sincere reference is the same thing which we follow in GSTR 1 also. No, GSTR 1 also, the 4-digit for the taxpayers having turnover below 5 crores for the B2B transactions only. That's the same thing we are following here. The only thing here is the values which we put in GSTR 1, there is no validation as far as the total tax liability is concerned. But as far as in GSTR 9, that table becomes crucial. So that validates the value by applying the percentage on the taxable value. The tax liability has to tally. Tax liability has to tally. Okay. Then I'll cover the subject fully first. Then I will answer every questions raised in the chat as well as the Q&A box. Don't worry. Here and there, whenever I get the relevant questions, I am just giving the answers. Yes. Table 18, HSN wise summary of inward supplies. Similar to the earlier years, this is also not mandatory in the sense it is an optional one. Yes. So table 18, which is optional. Only table 17 is mandatory. Okay, now comes the update for our 9C reconciliations statement for 21-22 reconciliation statement. Here, most of the relaxations were continuing like our earlier years. Only one thing in our table 12, 12A and 12B, that relaxation withdrawn. So I will see that. Anyway, here comes the 9C reconciliation statement. Okay. Here, the first table in our 9C is reconciling the turnover declared in the income tax returns. Turnover declared in the income tax return versus the GST supply, outward supply shown in the GST returns. GST returns in the sense here GSTR 9, because the sequence here is first we have to file the GSTR 9 before proceeding with the GSTR 9C. First, we have to file the annual return GSTR 9 format. So, after filing submitting the application, then only we can commence filling the 9C reconciliation statement. Again, there is a question like, is there any deadline, due date for this thing? Is there any late fee? All these things. Again, this was cleared earlier itself. This is not a separate return. Again, and this is just a reconciliation statement. This doesn't have any separate due date and all. Similarly, this doesn't have any late fee kind of a thing also. Once we late file our GSTR 9, the late fee of 100 plus 100, 200 rupees gets accumulated in our annual return itself, that we are able to see while we put a compute liabilities tab under the GSTR 9 annual return. Yes. Coming to the 9C discussion, the first table which asks about our turnover reconciliation. Here, though there are so many items, being chartered accountants, everyone might have researched on every line items here. You have so many notes over here. Anyway, my part here, not to educate you about the explanation of the line items here, but I'm just straight away getting into the information what we can extract from TallyPrime for preparing this turnover reconciliation. Turnover reconciliation. Yes. What is that typically means? Like when I say when I go and put my P&L, when I go and put my P&L, that P&L shows 11,98,900 as sales, product sales, and 22,300 as my indirect incomes. So put together my outward supplies, because in GST terms, we do not have any bifurcation of direct income, indirect income, sales, all those things. All we have one word, outward supply, that everyone would have already understood. Yes, here the question is, my total outward supply as expressed in my IT P&L, income tax P&L, is this 12 lakhs 20,000, 12,20,200. Let's say my calculation should not be wrong. I will calculate here. Tally has the calculator part here. Okay. My turnover, sorry, my outward supply as per my income tax P&L is 12,21,200. 12,21,200. Obviously, this has to match with my annual computation statement outward supply. No, there is a small element. No, there is a big element itself. 12,54,400. The taxable outward supply comes here. 12,21,400. This is the reconciliation I have to do this 9C. So how I can do this is how go to the sales ledger, say sales register, where it is display account books, sales register. Go to the sales register, put the entire year, get into columnar mode. I don't need any voucher type, all these things. All items auto column. I'm just putting. Okay. Here, my 12,21,200 is there's 11,84,900 and the other income part. No, other income part. But this columnar report of sales register will give you what has happened in my outward supply. Okay, so my outward supply, which I marked was, we'll check again. I missed to note down it. Anyway, 12,54,400 is my 1254,400 is my outward supply. How I get that value? So here, sales register columnar format, sales register columnar format, all items in auto columns, all items in auto column. Okay, here again I will calculate, we will calculate it. So 11,84,900 plus transportation 37,500, leaving this output GST. Anyway, your GST will not form part of your outward supply as well as your turnover element. Okay. Packing charges 2,300 added. My discount 4,300. Leaving aside that output IGST, my GTA charges 20,000. GTA charges 20,000. My SEZ supplies 14,000. Put together 1254,400 comes. Okay. Here, this is how I can reconcile my turnover. This is what required in our 9C reconciliation statement. Okay. Then the gentleman will ask me, well, will ask us, sir, how should, anyway, being professionals, you should, you might have known how to take care this packing charges, discount, all these things. These are all section transaction value, the items coming under transaction value. No, the net of this packing charges, transportation, discounts, all these things comes under section 15 transaction value element. I think this is there in our annual return part itself. In the M line, adjustment in turnover under section 15 under rules there and there. No, that is nothing but our transport charges, packing charges, discounts, which affects the transaction value. So here, by this example, you have to be very much clear. My sales shown in the P&L account may have some sort of a difference while compared to the outward supplies in GST returns, outward supply. The reason for the differences would be all these kind of additional charges or discounts charged in your bills. Because when I get into that particular transactions, my bill runs like this. My GST outward supply takes care of this net value only, but my financial ledger of sales takes care of this gross product values. Therefore, there comes the difference. But in GST, since we have to be sure on the tax amount, so we strict on the net values. Therefore, this is the difference while we take care of turnover reconciliation in 9C. Hope everyone could understand how best we can utilize the TallyPrime, while going forward for this self-certified reconciliation statement in preparing the turnover reconciliation. Then comes to the recent update part. Here, similar to earlier years, though you have the liberty to mention the exact variation, what was the difference, section 15 value, this thing, no? But our relaxation says every registered person shall have an option to not fill this table. If there are any adjustments required to be reported, then the same may be reported in 5O is the general adjustments. So the residuary value. So there straight away, there are so many people, they just put the IT turnover value in the top line and they put the GST supply and the bottom line. The difference between these two, they put it in the O value. So O line. So there are so many people doing this thing. Anyway, that is been there in the guidance itself to relax the people in the initial years. They did it. That relaxation continues for 21-22 also. I'm not saying this has been taken out, withdrawn. It is there in the 21-22 also. They're referring to the notification number 14/2022, 5th July 2022. This relaxation continues for 21-22 also. Yes. The 12 table, which is nothing but 12 table in GSTR 9C. 9C. That 12 table talks about the reconciliation of net input tax credit. Net input tax credit, in the sense, net input tax credit availed as per GSTR 9. As per GSTR 9, what was the value availed? Net input tax credit means table 6 minus table 7. The value under table 7F, net ITC availed. So that is to be filled in this E line item, because the JSON file generated from this 9C utility will cross verify the value which we put in this particular E line item, right? So therefore, this E line item will refer the 7F value, table 7F value in table 7J, I believe. I should not be wrong. We'll check the exact. In the bottom line of that table 7, that shows the net ITC. That net ITC value comes here. In the top, we have the ITC availed as per our annual financial statements, audited annual financial statements. What is that annual audited financial statements? Nothing but our tally books of accounts, because we used to tally the data in our tally books of accounts. Then we take care of these things to the IT. So what is that value? What is that value? I recommend every one of you maintaining the tally books, just have ledgers, input tax credit ledgers separately, output tax credit ledgers separately. Month on month, try to have a practice of transferring the input credit values to one common ledger of GST payable, output tax ledger values to a common ledger of GST values, and put that tax payment entries in the GST payable ledger itself, so that by putting this thing, what will be the helpful thing which we get is, at the year end, when we want to compute the ITC availed as per the audited books of accounts value, here ITC availed is nothing but the debit values of your input tax credit ledgers. Those are the ITC availed. So here, when I say output IGST debit value, I can remove it. You can remove it. So only this thing, only this input CGST, input IGST, input SGST, even this output, there is no debit balance. Okay. Anyway, we can ignore it. So this 4,26,882, I think 4 lakhs. Yes, 4,22. Here I should say one thing, because one line is coming and going out. I am just putting Control R and Control U. Control R and Control U is something removing a line and retrieving a line in a report, temporarily removing a line and temporarily retrieving a line. Earlier in Tally ERP 9, we had Alt R and Alt U, that's there in TallyPrime in Control R and Control U. Yes, here the point here is the ITC availed as per the audited books of accounts. Means audited books of accounts is nothing but our tally books, where what we did, what we would have done in the audited financial statements, we used to furnish this balance sheet to audited financial statements. No, in that we used to disclose this duties and taxes. Duties and taxes, if it is debit balances, we would have said that loans and advances, this 2,22,000 would be the excess input tax credit carried forward. So in that sense, so the net effect was shown in the audited financial statements. To arrive at the net effect, we should get the what is the ITC availed portion as per our books of accounts. As per books of accounts, ITC availed portions are nothing but my debit balances of my tax ledgers. So this is how we should have some logical understanding of our books of accounts compared to the tally books as well as the audited statements. Okay. Here the yes. Here, what is the change for financial year 21-22 for this particular statement? What is the change for 21-22? 12B and 12C, which talks about ITC booked in earlier financial years, claimed in current financial year. Until 2021 financial year, these two line items are not mandatory in the sense, are made optional. Therefore, we straight away go and put some values in 12A and straight away in 12E. Obviously, in most of the cases, both these things will tally, because what was availed in as per books would be obviously be availed as per 3B also, because we avail things as per ledgers only. Therefore, these two should tally, should match. So where comes the difference? Where comes the difference? Yes, there are questions people might have asked while preparing the GSTR 9. Sir, when I give the bifurcation for table 6 in GSTR 9, that values include the values which were availed for the earlier year, before the year values. Let's say for the 2021, I belatedly availed some ITCs which was availed during 21-22, sir, which is also included. In that case, ITC booked in earlier financial year and claimed in current financial year. So let's say, as far as the audited statements are concerned, audited statements concern about the respective financial year only. But in our GST returns, GST return talks about the 3B values availed during the year. So when we avail the earlier year ITC in the current year 3B, that will have the difference in the annual statements. So that should be mentioned here. So say for example, if my 2021 ITC availed at 21-22 3B, 21-22 3B, obviously my 21-22 audited financial statement ITC availed would be lesser than the ITC availed as per my GSTR 3B. Therefore, that value is getting added in the 12B. Then ITC booked in current financial year to be claimed in subsequent financial year. This is again, for example, for 21-22, if I left out some ITC to claim before 31st March itself, I found it by May, June or July in the subsequent months of the 22-23, the current financial year. In that case, ITC booked in current financial year, in the sense 21-22 itself, I should book it for finalizing my audited financial statement and to show it in my income tax returns. Therefore, my tax ledgers would already comprise those values, but my 3B would not have that thing. Therefore, my 3B value would be lesser. My audited financial statements would be higher. Therefore, that reduction is taken care in this 12C. So these two are not, and these two were optional in the earlier years. Now it becomes mandatory to fill it. Therefore, for this thing again, also I instructed so many of you to have a separate ledger called ITC tax ledger, deferred tax ledger kind of a thing. If whatever value comes under a deferred tax value in the opening level comes in the B part, whatever comes in the closing comes in the C part. That is been well taken while preparing this 12B and 12C. The subject here is, the point here is the concession which was, the relaxation which was carried till 2021 got withdrawn for this 21-22 as far as this 12B, 12C disclosure is concerned. Okay. Then for the 14 table, which talks about the bifurcation of our inward supplies. Inward supply. Again, when I see this table, being a professional for tax audit, the other information also will come in your mind. The class 44 schedule for the tax audit, which is also taking care, already takes care of this with the very same information. Anyway, here, though for the 21-22 also, this information is not mandatory, like it is also coming under the optional heading, similar to the earlier years. For the 21-22 also, this table 14 bifurcation is optional. The notification clearly states that. Anyway, I'll show you how to take this information, whether it is optional or not. Tally, being a tally person in the having a books in our TallyPrime, here in our 3B, I can go to the nature view. Okay, in the nature view, so let's say for the entire 21-22, I get into the nature view. In the nature view, inward supply is talking about the ITC part. The inward supply, ITC part, getting into that inward supply, there we have in the right hand side part, party wise, ledger wise, this thing. When I say ledger wise, my ITC availed as per the various inward supply ledger heads is shown here. By these reports, my table 14 information as well as class 44 information would be easily taken. This is one of, again, the strength of the TallyPrime. I think most of you might have experienced this also. If anybody found this is new, just put it in new so that I can understand. In the chat window, you can put that it's a new information. Means if you are able to understand this thing, please reply this thing. Anyway, thank you. Instantaneously, one new answer has come. Thank you. Sir, there are so many news are coming. Thank you. So certainly this is again the strength of TallyPrime. Please make use of it. Thank you for instantaneous reply. Yes, the same table 14 continues. There is nothing but the breakup of ITC availed on the inward supply ledger heads. Turnover reconciliation, everything we did it. Okay, all these things then and there I have covered it. Now comes the question and answer part. Okay, I'll just quickly run through the questions what were asked in the chat window.
I think first we can cover the Q&A, And meanwhile, I'll request the audience, if you want to ask directly, please do that. You can raise your hand. I will give you the permission to speak directly.
Thank you. Thank you, Komal. I think everyone might have understood this thing. First, I'll read through the Q&A. Thanks, Komal.
Thanks.
How to do RCM entries and mismatch entries reported and rectified. Mismatch entries rectified. Sir, gentlemen, please wait. Mismatch this thing. I think we have to this ITC reconciliation. Now we are doing manually. We have to wait. And then as far as RCM entries are concerned, I will just do the one thing here. As I already told you, the statutory adjustment part, which takes care of RCM also. Here, reversal of, I can say, first for RCM, we have two things. One is paying the RCM liability, reverse charge liability. The second part is getting back the reverse charge paid tax amount. Okay. First, increasing the tax liability. Increasing the tax liability, adjustment, nature of adjustment is purchase under reverse charge. So the first entry for reverse charge liability creation, I have to put this entry. So here, what is the entry? We can have once a common ledger like tax on advances, tax on reverse charge, kind of common ledgers under current assets. That ledgers would obviously be debit and credits will be get nullified. Therefore, so we can have such a ledgers. On creating the liability, debit that ledgers and credit the output tax liability. Then this will come under reverse charge liability. Liability will get raised. Then when we want to take back the RCM paid liability, increase in input tax credit. First, while paying the liability, it is increasing the liability, therefore increase in tax liability. While taking back the credit, increase in input tax credit, increase in input tax credit, again purchase under reverse charge. The entry would be in the vice versa manner, like in the sense, input the CGST, input SGST, input the tax ledgers, credit the temporary ledger, tax on reverse charge, tax on advances. Then that would be sufficient for getting the RCM book entries as well as RCM values reflected in the GSTR 3B. Can I plan to file GSTR 9 this week? Okay, my advice is just wait for first week of December because values are getting updated in 30th November, no? Therefore, you can wait. Then 8A table. 8A is a reconciliation statement. There are a lot more things are coming in TallyPrime. I think we have to wait for that. But this year, whatever we did, whatever you did for the earlier year, you can continue that. And rest of so many things are there. Please concentrate on that. Then in GSTR 3B, reversal given in other table, but this, just a minute. And in GSTR 3B, reversal given in other table, but this will not reflected in GSTR 9 annual return. When I can see, show if again this I will reduce in table 6 or 7. I couldn't get you, but if you put the reversal entries in the correct classification, sir, certainly that will get reflected in 3B as well as in GSTR 9. There is no doubt about it. We have checked a lot in that particular subject. Then section 17.5, blocked credit also reversed. 17 reversed in 3B, but there are a lot left. Sir, certainly it will come, sir. You put it in the respective classification, have a sufficient tally support. Certainly that will reflect, sir. We made it. Then as per rule.
Sorry, yes. Sorry for the interruption, sir. Mohan Kumar. Sir, please, table 17/5 blocked credit I show in reversed in my GSTR 3B every month. Okay. Based on the section, but it will not reflected in GSTR 9.
Okay, okay. I can
understand. That is my question. Okay. If I split into the 7 box, yes, here the value will be increased.
Understood, Mohan Kumar, sir.
Yeah.
I think your question is not about putting the entry in TallyPrime. This is
No.
about,
About in annual return.
Yes. Certainly, it will not appear in the table 7 because earlier in 3B, that ineligible ITC in section 17(5) comes as a separate line item in table 4 of capital D element, a separate item, which is separate information, which is not a reverse item. Therefore, it will not reflect. Anyway, table 7 items will not auto reflect in your GSTR.
This is relevant to previous my question, 3B reversal, 3B
yes.
in debit note, credit note, that also reversed in GSTR 3B other reversal.
Okay. இல்ல நீங்க தமிழ்ல கேக்கலாம். I can explain. I can
3B ல நான் reversal ல கொடுத்திருக்கேன். Already month on month basis credit note-ஐயும் reversal பண்றேன். சோ அதுவும் அங்க வர மாட்டேங்குது. இதுல ஆனுவல் ரிட்டர்ன்ல பாத்தீங்கன்னா அது அந்த 7 டேபிள்ல தான வந்து உட்காரணும். அது நெட்டா அங்க எடுத்துன்னு வந்து காட்டுது. இதுல 6 டேபிள்ல.
So, sorry to interrupt, but please can we keep the conversation in English so
yes,
that everybody
certainly. Yes, certainly. Sir, are you talking about the entry in TallyPrime or in GSTR?
In GSTR 9 annual return. I already given a reversal in GSTR 3B itself. Okay, month on month basis. But in GSTR 9 table number 6, this will not net only arrived. That will be split into table 7 as per section.
No,
that is right.
No, sir, you are wrong. I will actually, sir, please go and check and verify it once again. Actually, it will not take the net effect. It will take the table 6 will take about your the gross value of input tax credit will only be
not input tax, sir. நம்மளோட ITC portion, sir. Outward supply la நம்ம இது பண்றோம்ல அத கிரெடிட் நெட் பண்ணி தான போறோம்.
Yes, Mohan Kumar sir, you know my email ID, I believe. You send a mail to me, I will explain to this thing because when there are so many other questions, your questions is a lot of questions here. I can able to understand. If I able to communicate in regional language, I could able to very well communicate. So for the advantages of the entire audience here, I am just putting what was asked by him. His question is not about TallyPrime. His question about the values auto reflecting in GSTR 9 of GST portal. So that GST portal table 7, there is no such auto reflection. There the entries we have to put it in manually as far as table 7 is concerned. So that is the explanation made to Mohan Kumar sir. Thank you, Mohan Kumar sir. Rule 86B99 again, sir. You put it in mail. I think this is in payment after. These are all GST portal related things. Since this session is meant for TallyPrime related thing, we will concentrate on TallyPrime so that everybody could understand this thing. Table 17 HSN is mandatory for 21-22, sir, not for 2021. Sir, in table 6, where to mention the deferred of 2021 taken during yes, all these are relevant to your annual return related question. Anyway, I'll try to explain this thing. Sir, in table 6, just a minute. Table 6, where to mention the deferred of 2021 taken in 21-22, please guide. Sir, there is 10, 11, 12, 13 table is there. 10, 11 is for turnover, 12, 13 is for ITC, 12 is ITC reversal, 13 is ITC claim. Then office is running residential property owners unregistered RCM. Yes, again, this is a GST related question. So we had a recent amendment in 18/7/2022 where from anybody engaged their office in residential premises, they have to do the reverse charge payment, RCM payment for the rent accounting. Yes, beyond the TallyPrime questions, there are so many tax questions are there. How to do 180 days reversal entry in Tally? Yes, this is a TallyPrime question. Fine, thank you. F7 journal, there is a statutory adjustment, reversal of input tax credit, non-payment of suppliers to Rule 37. Here, I can reverse that input tax credit. No. So for reversing the input tax credit, you have to first debit that particular supplier and credit the input CGST, input SGST. Then this will appear in the non-payment portion. I think your question is answered. In our company, multiple GST registration, how to get data GST on 3B multiple registration for one company. Sir, this is also in pipeline. Please be in watching the TallyPrime updates. Certainly this will be addressed. Right now, we have to maintain separate company data for separate GSTs. In GSTR 9 upload option available in TallyPrime. No, there is no such direct upload, even JSON upload, anything. There are relevant information which can be retrieved from Tally annual computation statement. So from that information, we have to manually fill in the information. How to entry in Tally if I don't pay my creditor 180 days out? That I have shown, sir. Rule 37, I have shown. Go to the journal entry, that statutory adjustment, non-payment, select as a particular additional information. Certainly that would be addressed. Okay, I have covered the Q&A. There are some questions in chat also, I believe. I'll run through that questions.
So let's go from bottom to top. So I think the bottom question is, can we make a particular ledger inactive?
Yes, can we make a particular ledger inactive? Okay, we can make particular voucher type as inactive. I don't think there is a facility to inactive a particular ledger. We can make a voucher type inactive. Ledgers are inactive means you delete it. You delete the transaction, you split the data, you delete that transaction. That is one way of doing this. Residential property used business purpose, RCM, sir. This is also GST question. So I am just quickly going for the Tally questions. Yes, RCM, residential property. If you engage your business in residential premises, RCM is there. Need 8C explanation because 2021 ITC amount, where should I? Sir, 2021 8C, there is no connection to that 8C. 8C of 2021 will carry that 2021 information. If you avail 21-22 in the current financial year, then that will come under 8C, sir. State-wise ledger, how to extract in state-wise ledger, how to extract. I couldn't get your question, sir. Can you elaborate on it? Actually, state-wise, here there is a report in Tally. I think you can check that in your GST reports. There is update party GS10. Sundry debtors, I believe. Sundry debtors, you extract this in Excel, extract in Excel and filter it. In that way, I think you can fulfill your requirement, I believe. State-wise ledgers, particularly party might be change organization type. I think this Vidyashree, I think this answer would be helpful to you. How to enter in Tally if I don't know? Yes, sir. Again, 180 days. Rule 37, the same thing. Sir,
No,
this will.
I think by Faizan Ahmed, in TallyPrime, debit notes is less in Tally, but in 2B, debit notes come in reversal column. When we file GST return through Tally JSON debit notes, it not shows in reversal column.
Just a minute, I got it.
Faizan
Ahmed, yes. TallyPrime debit note is less in Tally, but in 2B, debit note come in reversal. Yes, when we file, sir. Yes, GST return through Tally, JSON, debit notes, etc. not shown. Certainly, gentlemen, sir. You know, because we file JSON for the GSTR 1 only. This debit note, you are talking about the inward supplies. This is not connected to GSTR 1, sir. Please be sure. Whatever debit note we put for the purchases, that will not form part of your GSTR 1. The debit note in GSTR 1 will be for outward supplies only, sir. Don't put your debit notes in, so purchase debit notes in GSTR 1. So that would be the mistake. So purchase debit notes would be the supplier's debit notes. Whatever your suppliers give a credit note, that would be debit note for you. So supplier credit notes, so obviously that will come as a 2B item. 2B item, we are not uploading it. We are just verifying it. We are just validating it in the 3B table 4 eligible ITC table. In the ITC reversal others column, we are just verifying it. Beyond that, we are not uploading anything from Tally, sir. So therefore, don't confuse with purchase debit note with outward supply debit note. GSTR1 uploaded from TallyPrime will take care of outward supply debit note only. We have multiple GST for one company. How can get GSTR and GSTR2 data from Tally for different registration numbers? Have different company data for different GST numbers. That is the current solution. Tally is working on it. Certainly we will have a finest solution on this thing. I believe, I think without any concern.
I think multiple GSTN feature would be available in the upcoming release, which will be expected in January.
Thank you.
3.2.
Thank you. Table 6, where to mention the deferred. I think this is also a GST question. Banu Rayhana, I think taken during 21-22. Table 6 to mention the deferred 2021. Don't mention 2021 ITC. Actually, it contains in 6A. Let it be, but it would be a difference in table 8. Certainly have a reconciliation statement for that. Okay. So then table 17, one mandatory, or table 17 is mandatory, 18 is not mandatory, sir. I think this already addressed. Okay, there is a new chat message, I think now came. Sir, if a party change its organization type, not the company name, I need that organization to exist to be viewed later. That ledger of the party should not be deleted, because in case TDS vary for each organization type. Yes, certainly. Okay, if you don't have any transaction in that particular ledger, what is the purpose of having that ledger in your books of accounts, sir? It will add up in the ledger list, so that will again confuse it. So please check on it. What is the exact requirement for retaining that particular ledger? Anyway, understood. Otherwise, create a separate ledger. I think actually there are some questions like a person from 1st April to September, say, for example, he doesn't have a GST number. After that, he has some GST number. In that case, how can we can do it? We have to change the registered person type and all. I simply say, sir, create a separate person for having a GST number, so that your transaction would not be confused at all. Otherwise, earlier transaction would be confused. This is the same answer for your question also. Can TallyPrime be configured in such a way that delay in payments over 180 days are automatically reflect that automation? Because these are all not automation, because 180 days and above reversal is not a permanent reversal, you know. Once we pay it, we can reclaim it. So these are all this thing, ineligible ITC, reversal. These are all the manual things. Even you can see in the GST portal upload, auto-populated information. These informations ineligible, all these things would not be auto-populated. These are all the manual things that has to be marked. So therefore, Tally also has in the statutory adjustment marking of these things. Okay. So I think I have answered in their questions, I believe.
Yes, sir. I think so. In the crowd, two people had raised hands, Miss Vidya Shri and Mr. Sundar Vadivalji. So I have given you permission to talk if you have a question. Mr. Sundar
Vadivel.
Sorry, my bad.
Hello.
Sir, please ask your question. Yeah.
Can you hear me?
Yes. Go ahead, Sundar.
Sir, this with regard to the state-wise ledger, I mean here, they are requiring state-wise balance sheet, state-wise P&L. Okay. Everything they are asking state-wise.
Certainly, I have a different company for that. Why you put it in the same company data? One GST number here. My sincere advice to every one of you is have separate data for separate GST number.
Okay.
So have a different company data. Don't have everything in single company data. have different tally company data for that. Certainly.
We have one state itself, we have more than one vertical.
One vertical, it's different, sir. Actually,
Yes.
what about GST number? Why? How many GST number you have?
GSTN, it has more than one GSTN.
That's what the thumb rule here is. What I wanted you to do is with the present features, have one company data for one GST number. Don't club 2-3 GST, even though all the companies are, all the PAN numbers are same for 2 or 3 GST numbers. Don't club those accounts. Have one company data, tally data for one GST number. That will help you for generating the P&L balance sheet for separate GST numbers.
Sir, suppose same one GST in itself I am having, but I am selling over all the states. Assume that I am having customers spread over all the states.
Okay.
Similarly, I am purchasing from all the states.
Okay.
So state-wise, I want to see where I can enter in the master state-wise. If I enter, I want to see that. You have shown one customer.
Sir, one thing. Your question is relating to GST reporting or just to have an MIS, state-wise MIS kind of thing?
State-wise MIS.
MIS. Yeah, there are so many ways of in it. One is you can have cost center kind of a thing. You can have a group-wise, state-wise as a ledger group. Like this, you can have so many ways of doing this thing. If you have each state as a separate accounting groups, you classify the ledgers under separate groups. That will again, there are so many ways of classifying your ledgers. If you classify those things, then the reports will come. First, you create the ledgers under separate accounting groups. Then the reports will come.
Okay.
Thank you, sir. Thank you. Yeah, Vidya Sri.
Thank you for giving me a chance. I asked you the same question again. Suppose consider I have a subcontractor. Initially, he has been as a partnership, and now he has changed to a sole proprietor. So in that case, the TDS percentage will actually change.
Have different ledger, ma'am.
But the thing is, the accountant will not be aware to which, because the company name is same. The accountant will not be aware to which one he has to enter.
Just prefix or suffix some proprietor or this thing, whatever, for your understanding, in your alias name, actually the alias is one of the finest facility in Tally, wherein we can, whatever notes we can have like this, Vidya Sri, the same name, Vidya Sri proprietrix, we can say, let's say, fine. Here, Tally has the alias name, no? Alias name. I can have just Vidya Sri, the same name. Okay.
Okay.
Sundry datas. Okay. Then again, Vidya Sri firm.
Okay.
Vidya Sri, the same name. I can put it in alias. Okay. Sorry. A mailing name, not an alias. Sorry, I have wrongly. Mailing name, I can change it Vidya Sri. So that all your ledger printouts may have Vidya Sri as a common name. But in the original ledger name, you can have suffix, proprietrix or firm kind of a thing.
Oh, the person entering will also know that whether it is a firm or
certainly. All this. Even there are some item codes, stock item codes. There are some customer IDs in automobile industry. There are some customer IDs. So all these things have been taken care in ledger name itself, suffixing and prefixing. And then there may be some requirements. They should not come in printout, all these things. When you want anything not to come in the printout, make it in the mailing name, a correct exact name. Then these are all the strengths, madam, strengths of TallyPrime. We have to use it.
But we can't make it as inactive.
As of now, voucher types alone can be made inactive.
Okay. Another question, can we have an option to see the hard copy of the invoice before making a payment? What we have is we have full books of accounts, full hard copies. We have to take each page one by one and put the entry. So do we have any option in Tally to see the scanned copy of the bill?
Right now, by default, Tally doesn't have, but there are so many customizations having documents attached. There are so many very well-versed customizations are there. Please check on with that product add-ons. There are so many things are there.
Okay. Another question, the last question, but last question. Suppose I'm going to make a payment to a party. Go to pending bills. Can you go to the pending bills? Do you have some option in that? Do you have uploaded something?
Yes, I'll try to. Yes.
Suppose I give cash discount for the taxable value alone, not the GST value. So in that case, if I give like this and give F8.
Come again?
After getting the pending bills, I want to see only the taxable value of a particular party. Do I have an option to see that?
Taxable value.
Yeah, I want it as a column display.
I couldn't get it. Let's say if you go by this creditors bill wise, okay. Okay. From here, what do you want to see?
Here, I want to have a split of the GST value and the taxable value.
GST value or taxable value? I couldn't get you.
Suppose we are purchasing from a party and we are paying them. We have not paid it. So in that case, we see the pending.
Have you tried this actually? Here in every ledger itself, bill wise, customer wise, bill wise, have you seen it actually?
Yes, sir. I have seen that.
You try it and customer wise, bill wise, we have to check it, and you just have a contact with the support team. Just to have a, certainly that would be retrieved actually. Taxable value, come again? What you, I have to try it once again.
I want as a split of taxable value and GST value.
Taxable.
Before pending bills, if you go to a particular ledger and give Alt F8, that is detailed, Alt F8, you can view it. But when you go to pending bills, you're not able to see a detailed view.
Okay, taxable value is not coming separately, you're telling, right? It will show actually the total invoice value, because the purpose of that particular outstanding report is this. Actually, your requirement is something different, wherein you require some breakup of the bills with the party. So I think we have to work on it. But the purpose of receivables and the purpose of payables is something different here. Anyway, have a touch in with the Tally support. We could possibly find a way out for this thing. Thank you.
Even for the hard copy, I contacted the customer care. They said we have to purchase it. We have some add-ons like that.
Certainly. That actually nothing is impossible as far as this Tally, because Tally is open for many integration and everything. Therefore, there are so many inventions over it which might not know. But as far as my limited knowledge, I am explaining this thing. But whatever you ask is something a peculiar requirement actually.
Okay.
Something a peculiar requirement. The standard bill receivable, bill payable, outstandings. Usually, when we talk about the receivable payment management, we used to talk about the total value only, not by the breakup of the values. So because even a single rupee outstanding, even a single rupee outstanding of a bill that suffers the reversal under Rule 37. It is not, even when I stop paying to the supplier a single rupee or some portion of a bill, then that again leads to reversal. Therefore, a bill means completely it has to be paid. So there could be some reason of not containing this thing. Anyway, have a discussion with the customization team. so that you will get a solution.
Sir, so I think we have a hard stop now. I think we'll take just one last question by Mr. Hirav. William, I've also given you the WhatsApp support number in the chat. So
Certainly.
if your query is still unanswered, please do. So save your number as this. You put in your query and you will get a reward.
Hirav Shah, please go ahead, sir.
Yeah, Mr. Hirav, please do.
Hello, good evening, sir.
Yes, sir. Please, sir.
Sir, I have a question that after I purchased from supplier and I've not made payment after till 180 days are lapsed.
Yeah.
Okay. Now I have to want to track that I till the date I am not payment till the date I am not made the payment, and now I want to reverse my ITC. Okay. That you have told that to reduce that ITC through reversal of ITC. That okay, but I want to track that bill.
This is the tracking.
Track that bill.
Are you able to see?
After some time, I made that payment to that supplier, and I want to again reclaim that my ITC. Then how I made the entry in Tally, and how make means how to track that.
You see, I just while you are explaining, I just gone into the report itself. You see the payables report here. Aging methodology is there. There I have to do from 0 to 180, 180 and above. 180 and above I put it. So these two bills are above 180. So this 23,000, 27,000. These two bills are. So get into those two bills and find out the tax values. Note down the tax values and put the entry in the journal like stat adjustment, GST, ITC, reversal of input tax credit under non-payment of taxpayer. Then these are all the manual entries, accounting entries only. This I cannot automate it because we need a separate notes for this thing. These are all the things, a one-to-one contractual arrangement between the parties, suppliers. So the information can be retrieved from Tally and the entries has to be manually made. So and that's what. So note it down those bills above 180 days and have the taxable values and put the entry. The accounting entry for this thing is we can have a separate ledger called tax deferred and tax not availed ledger kind of a thing under duties and taxes itself, or under separate current assets kind of a thing, and debit those ledgers, credit the input, actual input CGST, input SGST. Then this will obviously will come under your 3B rule 37 line item. So this is the only way of doing this thing. So tracking can be done by outstanding aging analysis. Note down the values, put the entries in journal as statutory adjustment.
Okay, sir. Thank you.
Thank you so much, sir. Thank you, sir. Thank you for your question. Most of the people will benefit out of this. Thank you. Komal,
I think that brings us to the end of the question and answer session. So that was a big thing. I think there is still someone writing. Can you please tell me the option for 180 days aging? So do we have a reward for this?
Just a minute. It is there in your statement of receivables and outstandings payable. I'm just slowly I'll explain. Display more reports, statement of accounts, outstandings, payables. There we have aging methodologies, aging by bill date. From that I can give any number of parameters. I give here 180 and 180 and above. 180 and above, then that gives the value in columnar. So what are all the bills which gone out of 180 days? It's shown here. This is the way I get the aging report in Tally. Thank you. Thank you.
Thank you so much, sir. I think our 1.5 hour session has become almost 2 hours now. And even till end, we have more than 100 people here. So that itself speaks for it, how enlightening the session was. Thank you so much, sir. And for the people who are asking for the video, yes, we will upload it in a day or two. I'll probably try and upload it tomorrow itself at community.tallysolutions.com under webinars. Every week we have a CA Connect. So please watch out for the topics and do register if the topic interests you or is of the need. Thank you, LL sir. I think you really need to drink water. It's been more than 2 hours speaking continuously.
Thank you.
So
No,
thank you so much. I will now end the session for all.
Thank you. Thanks to Tally. Thank you the entire audience for anxious participation. Thank you.
Thank you so much.
Thank you. Thank you.